Have you ever wondered how much your Social Security, SSDI, SSI, or VA benefits will increase this year, and when that extra money will hit your bank account? In this video, I'm diving deep into the details of the upcoming cost of living adjustment, breaking down exactly how much more you'll see in your monthly checks and why it matters for your financial future. From retirees to disabled Americans and veterans, these changes could add thousands to your income over time, but there are critical details many miss that could make or break your benefits. Stick with me until the end to uncover practical steps you can take right now to maximize your payments and avoid costly mistakes that could affect your eligibility for other programs. Before we begin, I would appreciate it if you like this video. You can help me continue to spread the old age lesson. If you haven't subscribed yet, I recommend you subscribe and turn on the bell so you don't miss any videos. If you like this video, please comment number 1. If you don't like it, comment number 0 to let me know, so I can make a better video for you. Now let's get started. Part 1. Why your benefits are increasing. Each year, the Social Security Administration, SSA, conducts a thorough review of economic conditions to determine whether adjustments to benefits are necessary to keep pace with rising costs. This process, known as the Cost of Living Adjustment (COLA), is a critical mechanism designed to safeguard the purchasing power of Social Security beneficiaries, particularly seniors and individuals with disabilities, as inflation drives up the prices of goods and services. The COLA ensures that the benefits you rely on retain their real-world value, preventing financial erosion over time. The calculation of the COLA is a complex, data-driven process rooted in economic indicators. Specifically, the SSA relies on the Consumer Price Index for urban wage earners and clerical workers, CPIW, a metric maintained by the Bureau of Labor Statistics. The CPIW tracks the average cost of a fixed market basket of goods and services that reflects the spending patterns of urban workers and clerical employees. This basket includes essentials like food, housing, transportation, utilities, apparel, and medical care, items that are fundamental to everyday living. To determine the COLA, the SSA compares the average CPIW for the third quarter, July, August, and September, of the current year with the same period in the previous year. If the CPIW shows an increase, indicating that the cost of living has risen, Social Security benefits are adjusted upward by the same percentage for the following year. For example, if the CPIW rises by 3%, benefits increase by 3% to reflect the higher costs beneficiaries face. This adjustment is announced in October and takes effect in January of the following year. However, the CPIW is not a perfect measure for every beneficiary. Many seniors, for instance, allocate a larger portion of their budgets to healthcare expenses, such as prescription drugs, doctor visits, and medical procedures, which often rise faster than other goods and services. Critics argue that the CPIW, which is based on the spending habits of working-age urban employees, may not fully capture the unique financial pressures faced by retirees or disabled individuals. As a result, some beneficiaries feel that the COLA increase doesn't always keep up with their actual expenses, particularly in areas like healthcare or housing, where costs can spike disproportionately. Despite these limitations, the COLA provides a vital safety net. One of the most significant aspects of the COLA is its permanence. Once an increase is applied to your Social Security benefit, it becomes part of your baseline payment moving forward. This means that every subsequent COLA will be calculated based on the new, higher benefit amount, creating a compounding effect over time. For example, a $50 monthly increase this year not only boosts your income immediately but also raises the foundation for all future adjustments. Over a 10-, 15-, or 20-year retirement, these incremental increases can accumulate into thousands of dollars in additional benefits, significantly enhancing your financial security in the long term. This compounding effect underscores the importance of the COLA as a tool for ensuring that Social Security remains a reliable pillar of support throughout your retirement or disability. Part 2. Social Security Retirement, SSA benefits. For the millions of Americans receiving Social Security retirement benefits, the annual COLA can make a meaningful difference in their financial well-being. As of recent data, the average Social Security retirement benefit is approximately $1,900 per month. A COLA of 3%, for instance, would increase this amount by about $57 per month, translating to an additional $684 per year. For retirees receiving higher-than-average benefits, perhaps because they earned higher wages during their careers or delayed claiming benefits until age 70, the dollar amount of the increase will be even larger, as the COLA is calculated as a percentage of your current benefit. One common concern among retirees is whether additional income sources, such as part-time work, pensions, or investment earnings, might affect their COLA eligibility. The answer is straightforward. They do not. The COLA is applied universally to all eligible Social Security retirement beneficiaries, regardless of other income or employment status. Whether you claimed benefits early at age 62, at your full retirement age, typically 66 or 67, depending on your birth year, or delayed until age 70 to maximize your monthly payment, you will receive the same percentage increase as everyone else. This ensures fairness and consistency across the program. The long-term implications of the COLA are often underappreciated but critically important for retirement planning. Consider a scenario where both you and your spouse are receiving Social Security benefits. Each of your monthly payments will increase with the COLA, and these increases compound over time. For example, a 3% annual increase on a $2,000 monthly benefit adds $60 per month, $720 per year, initially. But over a decade, the cumulative effect of annual COLAs could boost your household income by tens of thousands of dollars. This is especially significant for couples, as the surviving spouse may be eligible for a survivor benefit that reflects these increases, providing ongoing financial stability after one partner passes away. Moreover, the COLA can influence other aspects of your financial life, including tax planning and estate considerations. For instance, higher Social Security benefits may push more of your income into a taxable bracket, depending on your total income and filing status. Retirees should also factor COLA increases into their budgeting and investment strategies, as even modest annual adjustments can alter long-term financial projections. By tracking these increases and consulting with a financial advisor, you can better integrate them into a comprehensive retirement plan that maximizes your resources and ensures stability for years to come. Strategy. If you are still watching this video and finding these lessons useful, please comment number 1 below to let me know that you are still watching this video with me. Thank you for your valuable time. Part 3, SSDI, Social Security Disability Insurance. For individuals receiving Social Security Disability Insurance, SSDI, the COLA is equally important and often has an outsized impact due to the unique financial challenges many face. SSDI beneficiaries are entitled to the same COLA increases as Social Security retirement recipients, as the two programs are closely linked within the Social Security system. This ensures that disabled Americans, who may rely heavily on these benefits due to limited opportunities for supplemental income, receive the same percentage increase to help offset rising costs. The financial pressures on SSDI recipients are often more acute than those on retirees. Many face significant medical expenses, including co-pays for doctor visits, prescription medications, medical equipment, or specialized transportation to and from healthcare facilities. These costs can rise faster than general inflation, making the COLA a critical lifeline. For example, consider an SSDI recipient receiving $1,300 per month. A 3.2% COLA would increase their benefit by approximately $41.60 per month, or about $499 per year. For someone receiving a higher benefit, say $1,800 per month, the same 3.2% COLA would yield an additional $57.60 per month, or roughly $691 per year. While these amounts may seem modest, they can make a tangible difference in covering essential expenses. Importantly, the COLA's impact extends beyond the individual SSDI recipient. If you have dependents, such as a spouse or minor children, who receive auxiliary benefits based on your SSDI record, their payments will also increase with the COLA. This can provide significant relief for families managing tight budgets, as these additional funds can help cover household expenses, childcare, or other needs. Many SSDI recipients are unaware of this ripple effect until they see the updated payment amounts, but it underscores the broader impact of the COLA on family finances. Another key point is that SSDI benefits, like retirement benefits, are permanently adjusted upward with each COLA. This means that the increases you receive today will form the basis for future adjustments, creating a compounding effect that can significantly enhance your financial security over time. For SSDI recipients, who may face long-term or permanent disabilities, this compounding can be a crucial factor in maintaining stability in the face of rising costs. In summary, the COLA is not just a benefit for retirees, it's a vital tool for ensuring that disabled Americans and their families can keep pace with inflation. By providing predictable, permanent increases to SSDI payments, The SSA helps protect some of the most vulnerable beneficiaries from the financial strain of rising living costs, ensuring that their benefits remain a reliable source of support. Part 4. SSI. Supplemental Security Income. Supplemental Security Income, SSI, is a critical program distinct from Social Security retirement benefits and Social Security Disability Insurance, SSDI. Unlike those programs, which are based on an individual's work history and contributions to the Social Security system, SSI is a needs-based program designed to provide financial support to individuals with very limited income and resources. It serves as a lifeline for low-income seniors, disabled individuals, and others who may not qualify for other Social Security benefits due to insufficient work credits. The program targets those who face significant financial hardship, ensuring they have a basic level of support to meet essential needs. As of 2025, the maximum federal SSI payment is $914 per month for an individual and $1,371 for an eligible couple. When the annual cost of living adjustment, COLA, is applied, these amounts increase proportionally based on the same percentage used for Social Security retirement and SSDI benefits. For example, a 3% COLA would boost an individual's monthly payment by approximately $27.42, resulting in an additional $329 per year. For a couple, the same 3% increase would add about $41.13 per month, or roughly $494 annually. While these dollar amounts may seem modest, they can be transformative for SSI recipients, many of whom rely on these funds for necessities like food, utilities, rent, or medical expenses. For SSI recipients, every dollar counts. An extra $27 per month could mean a slightly larger grocery budget, the ability to pay a utility bill without falling behind, or the chance to afford small but essential items, such as personal care products or transportation costs. Unlike many Social Security retirement recipients, who may have access to pensions, savings, or part-time income, SSI beneficiaries often have no other financial resources to fall back on. As a result, the COLA increase serves as a critical buffer against inflation, helping to preserve their ability to afford life's essentials in an economy where costs are constantly rising. However, the needs-based nature of SSI introduces potential complications. Because eligibility for SSI is tied to strict income and resource limits, an increase in your SSI payment due to the COLA could, in some cases, affect your eligibility for other assistance programs, such as Medicaid, the Supplemental Nutrition Assistance Program, SNAP, commonly known as food stamps, or subsidized housing programs like Section 8. For example, some states adjust eligibility thresholds for these programs based on total income, and a higher SSI payment could push you slightly above the limit, potentially reducing or eliminating benefits. This interaction between SSI and other programs varies by state and program, adding complexity to the process. To navigate these challenges, SSI recipients must be proactive. Regularly check your mail and online accounts for notices from agencies administering Medicaid, SNAP, or housing assistance, especially after the COLA takes effect in January. If you receive a notice indicating a change in eligibility or benefit amounts, don't panic. Many states offer exemptions, grace periods, or appeal processes to protect beneficiaries from losing critical support due to small income increases. Acting quickly is essential. Contact your local benefits office or a legal aid organization to understand your options and ensure your benefits remain intact. By staying vigilant and informed, you can maximize the value of the COLA increase while safeguarding your access to other vital programs. In summary, while the dollar amount of the COLA increase for SSI may be smaller than for Social Security retirement or SSDI, its impact is profound for recipients living on the margins. The adjustment provides essential relief, helping millions of vulnerable Americans maintain stability in the face of rising costs. By carefully monitoring their benefits and planning, SSI recipients can make the most of this increase to improve their financial security. If you are still watching this video and finding these lessons useful, please comment number 2 below to let me know that you are still watching this video with me. Thank you for your valuable time. Part 5. VA Benefits, Veterans Affairs for Veterans. For veterans and their families, the annual cost of living adjustment, COLA, extends beyond Social Security to include Veterans Affairs, VA, benefits, a fact that is often overlooked but critically important. VA disability compensation, as well as other benefits like dependency and indemnity compensation, DIC, for surviving spouses and dependents, are directly tied to the same COLA percentage announced by the Social Security Administration, SSA. This linkage ensures that veterans, who have made significant sacrifices for their country, and their families are protected from the erosive effects of inflation, maintaining the purchasing power of their benefits. Each year, after the SSA calculates the COLA based on the Consumer Price Index for urban wage earners and clerical workers, CPIW, the Department of Veterans Affairs applies the identical percentage increase to VA disability compensation payments. For example, if the SSA announces a 3.2% COLA, a veteran receiving a 100% disability rating with a monthly payment of approximately $3,700 would see an increase of about $118.40 per month, equating to more than $1,420 annually. Veterans with lower disability ratings, such as 40% or 50%, receive the same percentage increase applied to their specific benefit amount. For instance, a veteran with a 50% rating receiving around $1,000 per month would gain an additional $32 per month, or $384 per year, from a 3.2% COLA. This increase also applies to DIC, which provides financial support to surviving spouses, children, or parents of veterans who died due to service-related causes or while receiving VA disability benefits. For example, a surviving spouse receiving a DIC payment of $1,500 per month would see an increase of $48 per month, or $576 per year, with a 3.2% COLA. This adjustment ensures that families who have lost a loved one continue to receive support that keeps pace with rising costs. The COLA increase is particularly significant for veterans and their families because many face elevated expenses, particularly for health care. Veterans with service-connected disabilities often require ongoing medical care, including specialized treatments, medications, or adaptive equipment, which can be costly. The additional funds from the COLA can help cover these expenses, pay for home modifications, or ensure timely payment of bills like property taxes or utilities. For example, veterans have shared stories of using COLA increases to afford new prescription glasses, cover transportation to medical appointments, or avoid falling behind on essential household expenses. The permanence of the COLA adjustment adds to its value. Like Social Security benefits, once the increase is applied to VA payments, it becomes part of the baseline amount, and future COLAs build upon it. This compounding effect can significantly enhance financial stability over time, particularly for younger veterans or families who rely on these benefits for decades. In essence, the COLA ensures that veterans and their loved ones are not left behind as inflation drives up the cost of living, reinforcing the nation's commitment to supporting those who have served. Part 6. When will you see the money? This is the question everyone wants to know. One of the most common questions beneficiaries ask is, when will I see the extra money? While the Social Security Administration calculates the COLA in the fall, typically announcing the percentage in October, the increased payments do not take effect until January of the following year. This delay means that your December payment will reflect the previous benefit amount, and the new, higher amount will first appear in your January payment. However, the exact timing of when you receive the increased payment depends on the type of benefit and your payment schedule. For Social Security retirement and SSDI recipients, payments are distributed based on your birth date. If your birthday falls between the 1st and 10th of the month, your payment is issued on the second Wednesday of each month. If your birthday is between the 11th and 20th, you receive your payment on the third Wednesday. If your birthday is between the 21st and 31st, your payment arrives on the fourth Wednesday. As a result, depending on your birth date, you may see the COLA increase as early as the second Wednesday in January or as late as the fourth Wednesday. For example, someone born on the 5th might receive their increased payment on January 8, 2025, while someone born on the 25th might not see it until January 22, 2025. SSI payments follow a different schedule. Typically, SSI benefits are paid on the first day of each month. However, if the first falls on a weekend or federal holiday, the payment is issued on the last business day of the previous month. This means that many SSI recipients may receive their January payment, with the COLA increase applied, in late December. For instance, if January 1, 2025, is a holiday, the payment could be deposited on December 31, 2024, technically reflecting the January amount with the new increase. As a result, depending on your birth date, you may see the COLA increase as early as the second Wednesday in January or as late as the fourth Wednesday. For example, someone born on the 5th might receive their increased payment on January 8, 2025, while someone born on the 25th might not see it until January 22, 2025. SSI payments follow a different schedule. Typically, SSI benefits are paid on the first day of each month. However, if the first falls on a weekend or federal holiday, the payment is issued on the last business day of the previous month. This means that many SSI recipients may receive their January payment, with the COLA increase applied, in late December. For instance, if January 1, 2025, is a holiday, the payment could be deposited on December 31, 2024, technically reflecting the January amount with the new increase. For VA benefits, payments are generally issued on the first business day of each month, so veterans can expect to see the COLA increase in their January deposit, typically on January 2, 2025, if January 1 is a holiday. As with Social Security, your December VA payment will not reflect the increase, as the adjustment takes effect in January. To avoid confusion, check your payment schedule in advance. The easiest way to confirm your updated benefit amount and payment date is to log into your My Social Security account at www.ssa.gov for Social Security or SSI benefits, or your va.gov account for VA benefits. Both portals provide detailed information about your current benefits, the COLA increase, and your payment schedule. Setting up or accessing these accounts is free, secure, and highly recommended for staying informed. If you are still watching this video and finding these lessons useful, please comment number 2 below to let me know that you are still watching this video with me. Thank you for your valuable time. Part 7. What you should do right now. The COLA increase is good news, but to maximize its benefits and avoid potential pitfalls, you need to take proactive steps. As someone with experience guiding clients through these processes, I recommend the following actions to ensure you're prepared and informed. 1. Check your online accounts. If you haven't already, create or log into your My Social Security account at www.ssa.gov for Social Security Retirement, SSDI, or SSI, or your va.gov account for VA benefits. These portals are the fastest and most reliable way to view your current benefit amount, see the COLA adjusted amount, and confirm your payment schedule. If you're not tech-savvy, ask a trusted family member or friend to help you set up your account. Both systems are secure and provide real-time updates, eliminating the need to wait for mailed notices. 2. Review your budget. Take time to assess your household budget, even if you don't typically track expenses in detail. Estimate how much additional income the COLA will provide, for example, $50, $70, or $100 per month, and decide how to allocate it. Will you use it to offset rising costs for groceries, utilities, or medications? Could it cover transportation expenses, such as gas or public transit fares? Alternatively, consider directing the extra funds into a savings account for unexpected expenses, such as medical emergencies or home repairs. Planning ensures the increase has a meaningful impact rather than being absorbed into daily spending. 3. Monitor other benefits programs. For SSI recipients or those receiving Medicaid, SNAP, or housing assistance, the COLA increase could potentially affect eligibility due to income-based thresholds. While many states have safeguards to prevent benefit reductions from small income increases, it's critical to stay vigilant. Check your mail and online accounts for notices from these programs in January or February, as agencies may reassess eligibility after the COLA takes effect. If you receive a notice of reduced or terminated benefits, contact your local benefits office immediately to explore exemptions or file an appeal. Legal aid organizations can also provide free or low-cost assistance if needed. 4. Consider tax implications. For Social Security recipients, a COLA increase could push your combined income, Social Security benefits plus other income sources, above the threshold where benefits become taxable. For 2025, if your combined income exceeds $25,000, single, or $32,000, married filing jointly, up to 50% of your Social Security benefits may be taxable. Above $34,000, single, or $44,000 married, up to 85% may be taxable. Consult a tax professional early in the year to estimate any tax liability and plan accordingly, especially if you're near these thresholds. VA benefits, however, are generally tax-free, but other income sources could still affect your overall tax situation. 5. Stay informed and act promptly. The COLA is a valuable adjustment, but it requires attention to detail to fully benefit. Keep all correspondence from the SSA, VA, or other agencies, and respond promptly to any requests for information or verification. If you're unsure about your benefits or eligibility, contact the SSA at 1-800-772-1213 the VA at 1-800-827-1000, or your local benefits office for clarification. That's a wrap on everything you need to know about the upcoming Social Security, SSDI, SSI, and VA benefits increase. I hope this video has given you a clear picture of how the cost of living adjustment works, when you'll see the extra money in your account, and how to make the most of it. So, tell me, what's one key thing you've learned today that you're ready to put into practice? Maybe it's setting up your My Social Security account, planning your budget to stretch those extra dollars, or checking how the increase might affect your other benefits. Drop a comment below and share that one takeaway you'll bring to life. It could spark a great conversation. If you found this video helpful, please leave your comment below, and don't forget to like, share, and subscribe to our YouTube channel for more tips to secure your financial future.